Yo, 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 hey, good morning. Sorry for being tardy. My PC was running slow this morning. I looked down in the restart little buttons like, update. Oh, thank you, Microsoft, an update. So that's only taken a half an hour. So we don't have time to waste. Apologize for that, but I guess it's something you got to do from time to time. So let's go. Yes, Guy Killer. Yeah, I think so. I have no complaints. Thank you for asking. Bum, bum, bum. So anyways, good morning. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. Thank you very much for being here today at the Forex.Today YouTube channel. Be great if you could subscribe, like, comment, and all that kind of stuff. These videos are done every single day for you with the hopes of helping you become a successful foreign exchange trader. And when you've developed the skills and competence you feel that you need to be a successful currency trader and you decide you want to trade real money, would you please consider Traders Way? They're making this available to you. So they look at it as an investment into your future success. And so ideally, you would pay it back by opening an account at tradersway.com. Once you're in your back office, you can download my chart, MT4, and then download my chart templates for free so that these are available to you. So the tools I've been using for 15 years can be yours. So the idea here is that you have everything that you need, the right skills, the right temperament, right, as far as your background and your patience and your discipline. You have a good broker with a fast execution speed, amazing swaps, great customer service, competitive spreads, all that kind of stuff. Or if you prefer ECN, you could have that. I mean, it's everything, right? Uh-oh. Cufflink just came off. I guess it's a stupid Rolex. Hang on. Anyways, so you got everything you need. That's the idea. Who wears a watch like this? All right. So anyways, please visit Traders Way and get involved. And let's get your success going sooner than later, huh? Just remember, it'll still take blood, sweat, and tears for years, but at least you're not trying to figure things out. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Oops, guess we should go here. Yeah, so oil, right? Oil. Let's talk about oil. As you know, there was I don't know, do you want to call it a terrorist attack? Yeah. Well, it was an attack on an oil field. Where is it? I guess oil? I thought it was under energy complex. This will do fine. What have I been talking about the last, 15 years? You should have, me. You should have a fundamental bias for every asset class that you trade. You're either bullish on euro or you're bearish. That's it. You're either bullish, or I guess you could be neutral, right? You're bullish on pound or you ain't. That kind of stuff. You're not making things up as you go along. If you make things up as you go along, you're never going to catch the move. You're always going to be late. Very late in some cases, right? Now, if you take my advice and you actually develop a bias, and ideally it's through fundamental and technical analysis of macroeconomics and pricing and all that kind of stuff, but it really doesn't have to be. It could just be a random guess. And even if it's a random guess, like a flip of a coin, you'll do better. You'll do better because now you can create trade plans and you won't be late. You'll be waiting and you'll be ahead of the curve, right? And what it'll come down to is the beta agrees with your alpha or it doesn't. Meaning, if you're a bull, it might go up, it might go down, it might go sideways, but you're always looking for bullish setups. So you're very, very consistent. You You can't have consistent returns if you trade inconsistently and the market behaves inconsistently. It's just insane to even think it, right? So in that case, if you're a bull on an asset and the market happens to turn bullish too, that's the alpha and the beta, there's congruency, and you'll do really well. And when the market changes, you'll end up not getting as many trade setups because it's a bearish market, but you're a bull. You're just not going to get that many setups. So you'll be very consistent over the course of the year. You'll do very well. Now you have to be patient enough to see that happen. So I've been a bull on oil for like forever, right? And more recently, we were talking about this retest of 50. And I said, you need to make a choice. Do you believe this is going down to 40, or do you believe it's going to go up to 60? How many people remember that very specific conversation? We may have had it 2 or 3 times. Okay? Stay on topic, Sky. How many people remember that conversation? Okay? Okay, that's called a bias, which is a fancy way of just saying it's your opinion based on some sort of research. Okay? So, when you have a bias, sometimes you get lucky. That's it. So there was, let's call it a geopolitical event. There was a drone attack on Saudi Arabia on the second largest oil field. It did a lot of damage, and so they had to shut the whole thing down to avoid a bigger crisis. And in one moment in time, a singularity event in the price-time continuum, 5% of the world's oil went away. Oil prices went up. Now, could you have foreseen that? No, but when you're long oil, that price is in some sort of geopolitical or even weather-related event. Another way to say is to describe it is an exogenous shock. In fact, it's an exogenous supply shock. Don't you just love that? Exogenous supply shock. This is actually something you can model. We actually had to do it in class, and I think I had to write like a response paper or something to a case study. But anyways, an exogenous supply shock always will push oil prices up. An example of that would be a hurricane going into the Gulf of Mexico, and they have to shut down 3,000 oil rigs. And it doesn't actually have to do it, actually. It just has to be the threat of it happening, and oil prices will go up. Okay? Something like that. Or a drone attack on a Saudi oil plant. Or we've seen like freedom fighters fighting in Libyan oil areas. We've seen even refineries being shut down for maintenance. Will also do that. Okay? Let me get to that in a second, Jimbo. Okay? So my point here is this happens and this can be priced in. Now, they call this a risk premium, actually. So you might have the actual supply and demand price of oil plus a little bit priced in just in case there's a supply shock. It takes a long time to get a gluttony of oil, as we saw previously. It takes years to actually create too much oil, but supply shocks can happen instantly. Okay? And price will go up, always. Just that's the laws of nature. Okay? Now, isn't that interesting that if we happen to be a bull, anyways, which you know I have been for a very long time, you got paid. And the point I'm trying to make is that's part of the analysis we've talked about. Not a prime part, but it is a part of being a bull, right? But also, it had nothing really to do with the trade except you had a trade plan. Okay? Yes, Sky Killer, yes. I'll answer that one. Yes, eventually I believe all energy on Earth will be free. So the value of oil will simply be the value of making plastic or something. It'll be the wholesale price of plastic. Or even, right? But energy will be free, yes. But not this month, not next month, so don't worry about it. Okay? But yes, in 100 years, oil will be used for making plastic, and hopefully we even have a better material than that. Okay, going back to Jimbo. Wayne, isn't this outside of any plan which could theoretically gap against you? Yes, absolutely, Jimbo. So I'm not saying you should have this plan. I'm trying to teach that there is a part of commodity trading specifically, or some currencies like a reserve currency can jump overnight based on the unknown unknown. Okay? But if you're a bull, this is part of the analysis. Okay? There are geopolitical tensions all around the world. Oil's a lot of money, and very often they're interrelated, especially since a lot of oil is in the Middle East. And let's just say there is lots of different types of geopolitical risk in the Middle East specifically. Okay? And then some idiot on Bloomberg today said, oh, well, America is energy independent. Is that true, guys? America does have a lot of oil due to fracking. It's true. There's an oil plant or oil refinery in Louisiana. And the only thing it does is refine oil from Venezuela. Oil in Venezuela is like tar. Think of it that way. It's yucky, dirty, nasty, thick, heavy, gross, cheap oil. And because of the good people in the U.S. government, there's only one place on earth that can refine that into energy, and that's in Louisiana. No joke. The Venezuelans have to export their oil to the United States. Yeah. Where does Saudi Arabia, right, send its oil? To the United States. Good. So all the refineries in the United States refine Saudi Arabian oil. And there's a few, one that does Venezuelan oil and all that kind of stuff. But I don't know if you know this, but Canadian oil and Nigerian oil and Russian oil and Saudi oil and Venezuelan oil and Libyan oil, they're all significantly different things that come out of the ground. And we refine them into something like a product like gasoline or heating oil or lipstick or jet fuel or tar. That gets refined through a cracking process. So anyways, what I'm trying to get at is, guess what? America doesn't have any refineries for American oil. So it's no real good to the American economy. There might be some refinery just for the military, but there's not enough capacity to take all American oil that we just fracked and then refine it into gasoline and then sell it in America. We actually have to export all of it if we want to do anything with it. It's kind of interesting. So we're not energy bandwidth.